Why would that be? Do you know?
Well, just kind of chopping around. We're fishing for a near-term low here in both live cattle and feeder cattle, and something that we keep a close eye on when looking for a near-term low is where the RSI is at, or relative strength index. This morning, coming into today's session, the RSI for December live cattle was at about 27.5, and there's only been 2 times in the last year that we've been that oversold. September 13th and October 19th, and both of those times we got a little bit of reprieve and a near-term low. To get a longer-term low sustained in this market, we need to see the fundamentals shift a little bit more to the friendly side. The cash market, the bulk last week coming in 124 in the south, 122, 124 in the north. We need to see that pick up to get the money managers excited about being long this market. Right now, they just aren't excited to be long. I think managed money was net sellers of about 5,700 contracts last week, and they're only net long about 27,000 contracts, which is, for all intents and purposes, very flat in a very neutral position. But again, as I mentioned with soybeans in the last segment, the funds and managed money, they've got powder to add their long position if we can just get the momentum and a fundamental catalyst to entice them a little bit more.
Oliver, I did want to ask you about the value of the U.S. dollar. We've been watching that over this past week or two. And right now it's under 94, but it has been above it in the overnight trade. December now at 93.735, so now we're down 300 points. Is this something that you're putting a lot of stock in watching when it comes to the ag commodity trade nowadays?
I think the U.S. dollar is going to be extremely important to keep a close eye on going forward. We're pretty friendly to the U.S. dollar and think it can continue to firm a little bit of weakness here today. But if you look where we've come from over the last couple of weeks, we're trending higher, and that could potentially be a little bit of a headwind in the markets. And another thing that we're keeping a close eye on is the outside markets. The S&P right now down about 1.5%. Hopefully that doesn't really start to put more fear in the market, because if it does start to roll over a little bit more and increase the fear in the market, that could spill over and kind of dampen this momentum that we're seeing in the cattle complex to start the week.
All right. Well, thank you so much. And right now we see the Dow futures down over 400 points on the day. So taking a nosedive right there, too. Oliver Slope is with Blue Line Futures. He's